Over my chair.
Hey, good morning, everybody. Shane here from the Brookings Home Team, powered by Century 21. It is Monday morning. It is 8:15, and I have a lender next to me. So that must mean it's a Monday morning mortgage tip. I got Danielle here from Dakotaland Federal Credit Union here in Brookings, and we're just going to jump right into it here and talk about today's Monday morning tip. So thanks again.
Yes, good morning. I thought I would go over a little bit about income qualifications for rural development loans. So when you are applying for a rural development loan, in order to qualify for the program, we have to use everyone in the household, basically all household income. So for example, if you're married and you have a spouse and the application is only in one of the person's names, so let's just say the wife applies, and the husband is not on the loan, the husband's income still has to count towards qualifying for the program. Same thing if you have a part-time job. So if you have a part-time job or you have overtime, that extra income has to be figured in and calculated to see if you would qualify for the program. On the flip side then, when we
There's always a but.
Yes,
but.
On the flip side, so once you qualify for the program, that doesn't necessarily mean that that's all the income we can use for qualifying for the loan. You have to have a part-time job or be receiving overtime for 2 years to use that as far as payback for when you are qualifying for the loan amount itself. So just keep that in mind. Sometimes people think if you are just applying, solo, that you can qualify for the program. But if you do have a spouse, or it could even be like a mother-in-law that would live with you, or a family member if they're living with you and they are working, we have to use that income as well for qualifying for the program. Anyone in the household.
So, and as I was going to say, so anybody in the household that is, I suppose, 18 and older?
Yes.
So.
Yep. Exactly.
So you could have a litter of kids that could be working.
Yes, we don't count the children. Yes.
Okay.
So.
Perfect.
Yes, 18 or older.
So it can get a little, combobulated there. Best thing to do is to come in and talk to you. You got all the answers to those questions and figure out exactly what's going to work for them.
Yeah, and typically if we feel like someone's going to be close, like if someone gets a lot of overtime, then we'll try to calculate that income on the front end. That way we know if they're close or if they're over the limit, or if they're just barely under, then there could always, if they get a raise in between now and closing, then it might kick them over, which has actually happened to me. Then that kicks them over and then they no longer qualify for that program.
So that's another good point. So even though they may qualify at the beginning of the process, if you get a
pay raise
or a promotion, that it could bump you out there.
It could, okay. Yep, just depending on how long that person would take to find a home and close on the home. Yep.
So after they're closed, then you can get all the promotions that you want.
Then it doesn't matter, right?
So perfect. All right, good information there. As always, I'll have all of our information on the top, on the bottom, on the sides, wherever your device allows you to see that. And please feel free to share and tag anybody else in this video that you think would be interested in seeing it as well, or listening about it, and it'll be on our podcast episode, I think episode 4 or 5. I can't remember for sure on that one, but take a listen. Let us know if there's anything that you want answered in our next episode. Let us know. Again, message us directly, and we'd be happy to answer that on our next round of these things here, these tips. Yes, thanks. So thanks again, everybody, for watching. Have a great rest of the week. That concludes this Monday morning mortgage tip. We'll be back next Monday and have hopefully a new tip for you guys. So enjoy. Have a good one.
Bye-bye.